your bank account, and your Social Security, retirement, disability, SSDI, survivors, SSI, VA, and RRB checks. Are they safe and protected? That's a great question and exactly what I'm going to focus on for you right here in the video. So let's get right into it. I know in this video, I'm going to be following up to another video that I had out recently where I was talking about Direct Express, and for those of you that get your monthly benefits deposited onto your Direct Express card. Well, as a result of that video, down below in the comments section, I did see a number of comments from some of you here in the community reaching out saying, "This is great. You've talked about Direct Express, but what about our bank accounts? Can you talk about our bank accounts and our monthly checks going there?" Yes, I can, and that's what I'm going to be talking about right here in the video. Let's get into it, as this is some very important stuff, especially with all the turmoil that we're currently dealing with right now all across the country. However, really fast before we do, thanks so much for joining me. Please subscribe down below if you haven't done so yet. Also, as long as you're down there below the video, make sure to like the video and, of course, share this one with your friends, family, and social media so we can continue to help out as many people as we possibly can right now during this very busy, confusing, and uncertain time that we're currently living through. I'm here for you every single day, no matter what. That's my promise, my dedication, and, of course, my commitment to you and everybody right here in the community. All right, thanks so much. Please subscribe down below if you haven't done so yet. Let's get into it and talk about your fixed income benefit administered by the Social Security Administration, your bank account, and how all of these are very important right now, especially with, like I said, the financial failures that we've seen across the country. Now, a handful of months ago, you probably heard about this. A number of financial institutions, as in banks, collapsing. Now, I want to bring this to the forefront here because this is pretty important. Now, based on the research that I've been doing on this, obviously, as of recently, we haven't seen a whole lot of banks collapsing, but a lot of people out there, experts and analysts, are suggesting that was just the tip of the iceberg, and there's a lot more to come. There's a lot of small regional banks out there. They're going to bite the dust here later on this year, okay? So, obviously, I don't have a crystal ball. I'm not really sure what's going to happen, but it's all based on commercial real estate and a bunch of stuff like that. I'm not going to go down that road here in this video. I can certainly talk about it in another video if you'd like me to, but basically, commercial real estate is basically not working anymore, and it's a huge liability on the balance sheets of banks, financial institutions. Therefore, they're not getting paid. They're going to go under, okay? That's all we really need to talk about here. But now let's quickly talk about your monthly checks, okay? You get a check from Social Security, whatever it happens to be, it doesn't really matter, but you get it deposited into a bank account, okay? So this is exactly what some of you here in the community were asking in that previous video is, are our deposits safe? Well, let me break that down for you. Here's what it comes down to. There's two types of insurance. Now, obviously, there's probably more than two, but there's two main types of insurance that protect your deposits in bank accounts. Number one is FDIC insurance, okay? This is primarily the insurance that banks carry on their deposits. Now, if you have money at a credit union, it is NCUA insured, okay? So there's two types of insurance here I'm mainly focused on here in this video. FDIC, that's focused on banks, and NCUA insurance, which is for credit unions, okay? So it doesn't really matter where you bank, where you have your money deposited, things like this. These are the two types of insurance, okay? They're essentially the exact same thing for the most part. The difference is one focuses on banks, the other one focuses on credit unions, okay? Doesn't really matter where you're at, where you bank, doesn't really matter. It's just the protection that's on these accounts. Now, here's what they do. They protect up to $250,000 of deposits per account, okay? So let me break this down a little bit further. If you have money in a bank account, okay, so you get your regular benefit, whatever it happens to be, $900, $1,000, $1,200, $2,000, $600, doesn't matter what it is. If you have your money deposited into an account, let's just say that that financial institution fails, whether it's a bank or a credit union, again, doesn't really matter, okay? If they are protected with either FDIC or NCUA insurance, you're pretty much fine, okay? Unless you have over 250 grand in your account. Well, as I talked about in that video the other day where I talked about Direct Express, I can't really imagine there's that many people out there sitting with $250,000 in their account. There's probably somebody out there, but Probably not that many people, okay? If you do have that much, you're probably not watching this video. And if you are, well then, hats off to you. I'm not really sure what you did to amass $250,000. Reach out to me because I'd love to hear your story, okay? But my point is, there's probably not that many people hanging out with $250,000 in cash, okay? Just saying. However, provided your deposits are less than 250 grand, in the event of a failure of that financial institution, you are backed up by the FDIC or the NCUA, who will step in the event of a failure of that financial institution, and they will come due on your deposits, as in they will make good on those deposits, okay? The whole point of insurance, right? It's just like an insurance claim on a car, an insurance claim, renter's insurance, homeowner's insurance, literally doesn't matter. If there is damage, if there is loss of property, if there is a claim, you submit the claim and you get reimbursed, right? However, here's the difference. When it comes down to these protections in, financial institutions, there's no deductible, okay? What I mean by that is, let's just say that you have a claim on an automobile, right? So you're driving down the road, you get, I don't know, whatever. Some damage arrives on your car for whatever reason. I don't know. Let's just, whatever happens, okay? And, all is good, but you have some damage on your car. Let's just say it's $2,000 worth of damage. You submit a claim. You may have a deductible, $500 deductible, $1,000 deductible, and then they pay out the rest on that, right? In the event of a claim here, when it comes down to protections on your financial institutions and things like that, they're not going to come forward and say, oh, well, we have a $5,000 deductible. No, that's not how it works. You're protected on your deposits. Make sense? So that's what it comes down to. So long story short, I know this is a kind of a long-winded explanation here, but my point is, provided you're under the $250,000 threshold of money in your account, you're good. Nothing to worry about there. Now, don't get me wrong. In the event of a failure of a financial institution, it would be honestly kind of a headache because you'd have to get new accounts somewhere else. You would need to wait for FDIC or NCUA to pay out on your accounts. That would take probably, I don't know, a week, couple weeks. Honestly, I've never been in this situation. I don't really know. The only thing that I'm referencing is the collapse of these couple financial institutions a couple months ago. And those were, the depositors were paid out like 10 days later. So it took about 10 days for the depositors to get their money. However, let me tell you something else here. Remember, they protect up to $250,000. $250,000 is what they protect. However, in some of those banks that failed, there were depositors that had $5 million, $10 million, $20 million, $25 million or more in some of their accounts. They technically only had protection up to $250,000. Guess what? They got bailed out. So again, I'm not going to go down that road here in this video, but a lot of people were saying, why are they being bailed out with taxpayer dollars when they shouldn't have been, right? So again, just saying, so if you got over $250,000 hanging out, we'll probably be bailed out again. But my point is, it all comes down to the insurance. Now, you probably want to make sure that your bank, your financial institution is protected. I would say a general rule of thumb is virtually every bank, virtually every credit union is protected. Not every single one of them, but I'm just saying in general, most of them are. And usually when you walk into the lobby, the first thing you see on the counter is a little sign that says FDIC or NCUA, right? They have a sticker, they have a little plaque on the wall, they have a little plaque on their desk, they have something indicating that yes, hey, don't worry, you can trust your money here because we're insured, okay? You've probably seen it before. They all have it for the most part. You've probably seen it, or maybe you haven't seen it because it's just a little, inanimate object sitting there on the desk and you think, I don't know what that is. It just means that they're protected with insurance. Make sense? Anyway, for those of you that have been asking, this is a super long-winded answer to say your benefits are good, okay? In the event that you haven't deposited into account, if you have that protection, as in your financial institution has the protection, as in the insurance, you're fine, okay? So just like, with the whole debt ceiling drama that came out there was all kinds of people coming out saying, oh, watch out, everyone. We're going to lose all our benefits are stopping, they're going to be delayed, all kinds of stuff like that. And I continue to come back in video after video saying, no, they're not. Your benefits are fine. They're not going anywhere. And what do you know? Here we are. You know what I mean? They're totally fine, okay? It's a very resilient program. As you can probably tell, like nothing phases these programs and these checks for the most part. Anyway, hope this answers your question. Again, make sure to subscribe down below if you haven't done so yet. Share the video with your friends, family, social media, and go back and check out any of the other thousands of videos here on the channel. Thanks again for your support. I truly appreciate it. Enjoy your day. Have a good one. Take care, and catch you again later in the next